go to work and it's the groundhog day and it's fine and it was stable, but what is the point?
Welcome back, passive investor. We've got another episode of the Passive Income Adventures with Jamie Bateman. Jamie is a fund manager with Labrador Lending, and he is the host of a podcast that helps investors talk about some of the challenges that they've overcome and how they're working on things in the future. And it was the first podcast that I ever cried on. So thanks so much for that, Jamie.
Yeah, you're so welcome. I'm hoping you don't return the favor, but I did enjoy your story, and thank you for coming on my show as well. And I'm happy to be here. Thanks for having me.
Yeah, appreciate you coming on. I think that this is going to be a great conversation based on our first time that we met and had a chat. We got really deep, really fast, and that's the way that I like to do things. So let's just kick it right off with having you tell us your introduction, like your origin story. You can make it as Batman or Superman origin story as you like, and tell us you got started down this alternative path towards passive income and entrepreneurship, investor, and where that turning point really was for you. I'd love to hear more about that.
Sure. Yeah, I guess growing up, I was decent at sports, and so that kind of occupied my time outside of school. And I'm one of seven, so we had a big family, and we were always lots of energy in life and that kind of thing. So like most kids and teenagers, I didn't give my future too much thought. But then once I got out of college and my collegiate athletic career abruptly ended, and it was like, okay, now what? And of course I had thought some about what to do, but really didn't know what I was going to do, quite honestly. And I fell into an opportunity to work for a title company and then a mortgage company as well, really just to have a paycheck, quite honestly. But I ended up learning so much about what is title insurance, what is it, how does a closing work, what the fees on a settlement statement. Even though my father had been a real estate agent for many years, I didn't really understand that stuff. Like most of us were not taught that in school, right? I did learn a lot of practical information right after college through that, and then but still wasn't fulfilled, and so wanted to do something. I wanted to do something with a little more purpose, or at least what I viewed as having more purpose at that time. And so I joined the military, was deployed to Iraq, and then I ended up transitioning from military service into a civilian job with the Department of Defense. And so it wasn't necessarily the path I'd predicted, but it was a nice stable paycheck with good benefits, and ended up working there for 14 years. And what that allowed me to do, because frankly, it is one of the most secure jobs out there. I don't think there's always risk. Nothing is 100% secure, but I did feel that this position was certainly pretty stable. So I could go out and kind of on the side, take some other chances and have a little less stability, a little less predictability, as I know you relate to, of being an entrepreneur and an investor. And so that gets to the 2015, which is when I made the mindset shift that we can talk about. But that's a little bit about my background. I have a history in team sports, leadership, and military service, but always wanted to be a part of something bigger than myself. And it sounds like I'm tooting my own horn, but I think that's where purpose lies, is serving others and trying to be a part of a bigger purpose and team vision, goal, whatever you want to call it. So that's a little bit about my background. I can certainly dive in more on the mindset shift that I did make a while back as well.
Yeah, I would definitely love to hear about that turning point that you hit, because there are title officers, escrow officers, real estate agents, commercial brokers, bankers, lenders all over this country who are watching investors come in every day and close properties over and over again and wondering, like, how do I get into this? How do I get into this? I'm sitting on the wrong side of the table, but they're not able to make that shift. More often than not, the frontline real estate professionals do not become investors. So tell me about what that looked like for you, sitting on the wrong side of the table and thinking, how can I get over into that position where I'm an investor? Because lots of people think it, but very few actually do it.
Yeah, I did have a period of time between the title industry and mortgage industry from that point until I actually made the actual jump. But yeah, I don't know. It was a process, but I think what I ended up doing was 2014, 2015 timeframe, in that general timeframe. I was just sick and tired of the commute and the W-2, and like a lot of your listeners can relate to, I'm sure, just the daily grind, right? You go to work and it's the groundhog day and it's fine and it was stable, but I just what is the point? I mean,
Yeah.
it gets really old. What I started doing was listening to podcasts, and I know you were on the Bigger Pockets podcast a while back, and that was one key podcast for me. As I said, if I'm going to spend 2 to 3 hours per day at least in the car, I'm going to make the most of it. How do I get out? It really was at that point, how do I get away from the monotony of this soul sucking job? And I love my coworkers and all that. It's not like it was anything personal, but after quite some time, you start to run the numbers and you start to look forward and you say, this just isn't going to cut it. So what I started doing was intentionally looking around and saying, what can I control and what do I have going for me? In other words, stop watching the news. I used to come home from work and turn on the news, and I have no control over who gets elected president or how we handle this foreign policy or something. So really did make a major switch mentally about 2015. And I said, okay, my father's a real estate agent. My brother is a loan officer. I have title experience. My wife worked at a separate title company. So you start looking at the things you have going for you and the things, because everyone has advantages. And so I started looking at those and not paying attention to the things that I couldn't control anyway. And so in 2015, I actually went part-time. And this was another advantage to my W-2, or an advantage to it, is that I was able to go part-time and keep my benefits. Not everyone has that opportunity necessarily, but I was able to work for the next 7 years, anywhere from 16 to 32 hours per week. And I still had health insurance for our family, and I was still able to save up for retirement and that kind of thing. Obviously was getting paid less, but so I joked to you before we hit record, I didn't really rip off the Band-Aid fully. I took my time in approaching the entrepreneurship and the investor life. But then in March of 2022, just about 10 months ago, I did actually quit my job, which was was interesting in and of
Let's have a little
itself.
party right now. Let's just stop there. Let's just think about the momentousness. I don't even know if that's a real word,
Yeah.
of what you just said there. I'll say it again. What did you do 10
So
months
in March
ago?
of 2022, I quit my W-2. I said,
Woohoo!
I've had enough. It was funny. I haven't told this part of the story, if you don't mind. I felt like I was in Office Space, if anyone has seen that movie, so what had happened was I ruptured my Achilles. I was out for a couple months and I knew I was going to leave at some point, and certainly I'd talked this over with my wife, and wasn't a unilateral decision, but my heart wasn't in it anymore. But come back into work, and I went to my desk, and there's someone else at my desk, and and I said, hey, this was my desk a few months ago, but you may not know who I am. And he said, yeah, I don't know. And just keeps working. So I have to wander around the office. This is really a blow to the ego, if I'm honest. Wander around the office looking for my new desk. And I look over and I see a box with my name on it with, I guess, my stuff inside the box. So my first thought was, I should just take this box and literally never come back. I did quit that day. I did come back. I did work another month or two, but I told management I couldn't do it anymore. So it was very clear for me. There was no doubt and no regret. I think that I got too much of a taste of freedom and I just couldn't, I wasn't doing I wasn't going to be of service to them, and I couldn't do it. So yeah, ripped off the Band-Aid finally, or the other half of the Band-Aid maybe. Yeah. And here we are. So I'm probably busier now than I was then, but running different businesses, but I do work for myself and I love it. So yeah.
That your story, it reminds me of something I overheard my mom say to one of my elementary school teachers during some parent-teacher conference, and I was listening in when I probably shouldn't have been. And my mom was frustrated because she said every summer when she comes home, she's able to do what she wants and she learns and she gets stuff done. And then the school year starts and it's like trying to stuff a square peg into a round hole. And I don't think that she needs that kind of experience. She can do what she needs to do during the summer. She's proven it. I don't understand why it has to be like this. And that's a little bit, I'm putting some words in her mouth, but that
Mhm.
really woke me up to the fact like that when you have a summer vacation, which is basically what you had, even though you had a
Yeah,
ruptured Achilles.
yeah,
And I know from our
right.
previous conversation that was a
It wasn't fun, but
it's
yeah, I get
yeah,
it's
devastating recovery. But at the same
yeah,
time, when you go back to work and you've been away for a while and you realize, yeah, no, it's like summer vacation is over. And I remember
right.
being bored a lot during summer vacation. I remember being excited to see who my new teacher was and who what other kids were in the class with me. But at the same time, after that newness of the first week of school and your new outfits are all wore off and your crayons all need sharpened, I was just over it. I was done. And then it was just like a prison and a torture for the rest of the school year. And then summer vacation would come around again. And that's probably one reason I homeschool my kids. But that same kind of experience where you get that taste of what life can be like, and
Yeah,
suddenly you can't force yourself back into the square peg into the round hole
right.
anymore. And so, what that transition looked like, walk me through that because most people, the
Yeah.
reason they don't quit their jobs, because people
Mhm.
talk about this a lot. If I didn't have to work for my money and I just went to work because I wanted to, how much differently would I perform at work? And the answer that I've gotten over and over again when people get to that point is they quit. People don't stay working at their job if they
Yeah,
don't have to be there. You can find as much
right.
fulfillment and love in it, and a few people do, but most of us, the goal is to leave and work on our own projects. And the reason we don't leave is because we can't afford to. So when you got to that point
Yeah,
where you're like, I can afford to do this, what
yeah.
was that like? Because I know stepping away, it's a big loss of income, and there's a period of
It
time where you have to
yeah,
fill in that gap. So,
yeah,
how were
for
you
sure.
able to get to that point mentally and financially?
Yeah, I mean, financially, for one thing, I do think it's a little bit disingenuous when people will say, "I got my passive income or my business income up to match my W-2, so therefore I could quit my job." And it's right, but then you had both, and you just lost your W-2, so there's still a drop in
Cut it in
income. I
half.
don't care. I don't care who you are. Like, there's still a drop in income, so you're never it just yeah, there was certainly a blip there where look, there's a risk here, and we had saved up enough. My wife and I had developed a single family rental portfolio which we've continued to add to, and so we did have a good amount of rental income coming in. On top of that, my kids are both in middle school now, and well, one's in high school, one's in middle school, and my wife was looking to potentially get back into the workforce, so that certainly helped. Certainly from the our health insurance is through her work now. I guess mindset wise, so financially, we were able to just make it work. It wasn't ideal, but I don't know if it's ever, if you wait for all the stars to align, I just don't think it's ever going to be that way. So there's always, but again, the thing is, I saw it as, so this is switching over to the mental side of it. I could always go get a job again. And that might sound cocky or something, but I think most of us could go back and get a job. In fact, I had a security clearance and I guess I have 2 years where I can reinstate that fairly easily. So I still could go back and get that same job, most likely. Uh, I just don't see it as a huge risk as far as if you take a step back. One thing I think, and I've talked about this a little bit myself, but one thing to ask yourself is instead of saying, what if this, what if that, what if this, say, even if I start this business and it doesn't work, I still have options. It's going to be okay. I can still do X, Y, and Z. So I don't pretend to have the entire future laid out. I don't know exactly what's going to happen. But another thing I like to mention is that I prefer to look at things as I'd rather, and I had a roommate in college who would say this. He was a power lifter. People would say, man, it's really bad for your knees to squat that much weight. And he would always say, I'd rather wear out than rust out. If you're rusting out, it means you're just sitting there doing nothing. You're going to, in the end, be essentially, we're all going to die, right? So you may as well take some chances, may as well live a little bit and not die with regret. So, yeah, mentally, I was just done. And I've never been someone, and I don't know if entrepreneurship is for everyone, but I've never been someone who really needed a lot of, I put enough structure on myself and I was always disciplined with exercising, working out, preparing for athletics or whatever it is. I never needed that person looking over my shoulder to keep me on track. So I certainly need guidance and I need people to look up to. And I don't know everything for sure, but I just was self motivated, I guess, in that sense. So I think the leap to entrepreneurship mentally was a big relief actually for me because I just now I can focus on doing whatever I want, which again, I'm probably working harder than I was last year, but yeah, that's a little bit of a peek into the kind of financial situation and the mental situation as well.
You have the double grit of having been a high level athlete. Most of us don't play sports in college. I didn't even play, I barely played sports in high school. I had to join the sport where nobody got cut from the team. That was about how athletic I was. I love sports, but that doesn't mean I'm good at it. And then you join the military, which even just basic training, even if you're going into a desk job after that, doesn't matter. There's something about the military that demands a certain level of gritty mindset. And so you've got the advantage of having both of those. And the hard work that those disciplines require is a byproduct of how important that thing is to you. And so now that you're working harder as an entrepreneur, hard
Hmm.
work just comes. We don't just
Right.
work for the sake of working. We could go out and dig ditches and that would be hard work, right? But how do we decide
Sure.
what we're going to do? It's something that we're excited about, something we believe is either giving back to the community, giving back to the family, doing some good in the world, freeing up your mental energy time to focus on stuff that's really going to be the highest value. And so tell us what your life basically looks like now, where you can take that background of
Yeah.
that mortgage industry, that
Yeah.
athletic mindset, that military experience, and tell us about what your business looks like today.
Sure. Yeah. You do need to put in place certain boundaries just or else you'll go a little too far potentially. But yeah, today I run a small team, Labrador Lending. I have 4 people now part-time in the States that work for me. And then I have 2 virtual assistants that do a wonderful job from the Philippines. And that's my main business that I spend most of my time in. And I love running a small team. I love trying to make it a mutually beneficial situation. And I love seeing the growth in the people on my team. And so that team aspect has always been there for me as far as like we already covered with athletics and the military. So that transition hasn't been that hard. Day to day, I am trying to make sure I don't go overboard, frankly, with working too much on weekends and that kind of thing. And this year, I'm actually putting some things in place just to focus more on my health and my family. And in general, that's what I spend most of my time doing. We have 2 different mortgage note funds. One we're raising capital for still. We can talk more about that later, but that's all under the umbrella of Labrador Lending. And I'm in meetings a good bit, but my main focus is trying to raise capital, serve others as best as possible, serve our investors, serve my team, help them grow, and a rising tide lifts all ships. I do believe that small business truly is a force for good. And are we perfect? No, not even close. There's always issues or challenges, and I enjoy just that problem solving part of it. And I like to think that our business adds a decent amount of value to the world. So yeah, I feel like I have a little more impact right now than I did sitting at my desk at Fort Meade.
Now we have a couple of mortgage notes, and as far as passive income goes, it's tough to beat that. I really
Yeah.
almost never talk to the mortgagee. I'm a mortgager.
Yeah.
I don't even know.
Yeah.
The
Yeah.
guy who lives
Right.
in my house. We
Right.
manage it through an escrow company and it's super hands off. And so I like to give on this show not only the mindset shifts and the motivation to basically make a choice that is the right for you, no matter if it's on the beaten path or off the beaten path. But I also like to give some technical nuts and bolts,
Sure.
so the nitty gritty
Yeah.
of how do we actually get this done? Because it's not, I do know some mortgage note traders and investors. And even
Right.
though I have a couple, I don't really know very much about the industry from a trading
Yeah.
standpoint. So, can you give us an introduction, like how you would teach a 6th grader about it, to the
Absolutely.
world of mortgage notes and funds?
Yeah. So the way I try to dumb it down, you keep it simple, is I compare because we invest in both non-performing notes and performing notes. So I'm sounds like your 2 notes are your borrowers are making payments, and
It's
so
basically seller financing. I had a
yeah, yeah,
house, they moved in, they
yeah.
rent to own, and now they own it.
But
But
they're paying, right? I mean,
yeah,
they
they're
pay you,
performing,
right?
yes.
Yeah.
I may need to sell you
So
one of those notes when we go out of
okay,
town.
yeah,
So
we can talk about that. So so we buy both, and the non on the non-performing side, that just means the borrower is behind. They could be making payments, but they generally speaking they're 90 days behind or further. And so we buy those at a discount, and those I like to compare to a fix and flip property, right? So it's a distressed asset, meaning you can buy it at a discount, and we're buying the note, becoming the bank, if you will, becoming the lender, as you are essentially on your two seller finance deals, we'll buy the non-performing asset at maybe 50 or 60% of the principal balance. So let's just, for rough numbers, the principal balance is $100,000 on this property in Michigan, just making this up. And it's non-performing. The borrower was a year behind on their payments. We don't know what's going on. They got laid off. They stopped making their payments. We can buy that potentially for $50,000 to $60,000. And then there are different exit strategies that we might be able to pursue. It could be foreclosure. We try to avoid that path, but we will do that if we have to. And then could be a deed in lieu of foreclosure where we get the property. It could be, usually the best case scenario is to get the loan reperforming and do some type of workout with the borrower, which could be a forbearance or a loan modification. Get that loan reperforming, and then we can sell that maybe for $80,000. So that's a non-performing note. There are different approaches to those. Performing notes, which we also buy, we buy for cash flow. And those are much more like a buy and hold rental property. Notes, just like anything else, have disadvantages. Note investing really does not come with any tax advantages, for example. And another disadvantage is as the borrower pays down the loan, the value of that asset goes down. So the value of that note goes down because the principal balance is going down, whereas most real estate over time appreciates, right? So I like to think of non-performing notes like a fix and flip property where there's a clear exit point and you're adding value to that asset. And then the performing note is more like a cash flow play, like a buy and hold rental property. So hopefully that helps a little bit.
So what's the difference between, we were talking about this on a previous episode, where the dirty little secret in real estate investing is that the cash flow is really not that great. And so we're basically going from transaction to transaction, whether you're selling something long-term. Let's say you have a buy and hold, and a few years down the road, your return on equity is very low because it's appreciated a lot, but the rent hasn't appreciated as much. So you're like, I got a lot of equity trapped in there. How do I get it out? You refinance it or you sell it. And then you take that chunk of cash and then you go and reinvest it in something else. And so the cash flow is just enough to keep everything from being foreclosed on. Basically, if you are doing enough of it, you can have a pretty decent lifestyle off of it. But for those of us who are just moving in this direction, oftentimes cash flow is the biggest hurdle that we have.
Yeah.
And a lot of people will buy businesses. They'll buy car washes or a franchise or something so that they can enjoy the cash flow on that investment that they put into the business while they're enjoying the long-term appreciation and building of wealth on these assets that like are larger real estate. So
yeah,
this sounds like to me like note buying would be, it's almost more like buying a real estate business than it would be some sort of a long-term appreciation or wealth building play. Is that correct? Or tell me what that looks like.
So I hate to say it depends, but I say it a lot. And it really does, because you can be very transactional in the note space, just like you have wholesalers and flippers and real estate agents and on the real estate side, but you can be very transactional on the note side as well. Or there are plenty of people who do just buy for cash flow. But yeah, I would agree, if you're buying a handful of rental properties, you're not changing your life overnight from a cash flow and income standpoint. It's a long-term play. So if you're buying performing notes for cash flow, I think it's a similar thing. Even though the asset's not appreciating, you should be able to. So we can still find yields in the 12 to 15% range on a performing or reperforming note. So that's not too bad. If you compare it to dividend stocks or something else,
Only beats that.
It's pretty
good. They
good.
don't have any tax benefits either.
No, this is true.
Just briefly, where you were talking about how there are no tax benefits of note buying,
Right.
there are no tax benefits to buying stock. You have to have some sort of depreciating asset, like a house or a piece of equipment in a business. And a lot of people who are looking at notes are like, oh, there's no depreciation. There's no depreciation in most of the things that we invest in. So I just wanted to put that little insertion.
Well, and another point with notes is the collateral is huge. You don't have that in stock. If I buy a share of Apple stock, there's no collateral. The company, yes, it's supposed to be based on the earnings or whatever, but in our it's supposed to be. I don't know what it is now, but with mortgage notes, we invest in first lien mortgage notes for a reason, because I'm familiar with real estate, and so we do due diligence on that real estate itself thoroughly, because that's our collateral. So if the borrower doesn't pay, we have something backing our investment. So that's a key piece to mortgage note investing. Yes, there are downsides compared to real estate, but in mortgage notes, there's a kind of the collateral is the real estate. So it's a little more secure in that sense compared to a lot of other asset classes. So yeah, hopefully that makes sense.
We've been looking at purchasing a business. My husband he's unemployed currently. We're calling him self-employed.
Yeah.
And so he's just looking at all of his options. So he can start looking at unemployment, like a claim here pretty soon. And so while he's looking for a new W-2 and he's looking at taking a larger part of my business and he's also looking at purchasing some sort of a business, he just doesn't really know yet. And that's what we're looking at for that cash flow play. But the thing I really love about note investing is it takes our real estate knowledge and really makes good use of it. We don't have to go buy a franchise for lawn care or something like that because we're real estate people. And I told him just this morning, I said, it seems silly that we're looking at other opportunities when our knowledge of real estate it's like a surgeon saying, I want to start a YouTube channel and never cut into anybody again.
Yeah.
Let's take our highest and best skill set and go use that to really make an income. And that's why notes really appeal to me because they're extremely passive and we wouldn't be getting depreciation off of a business anyway, but we're looking for something that has good cash flow.
And I know you all are about to travel some, and that's another advantage to notes is you can do it from anywhere. You truly can. It is really location independent. But yeah, absolutely. I mentor some people in the note space, and usually what I find is that people come over from real estate. The most successful note investors probably have some real estate investing experience, even if you want to separate the two. They usually have some type of real estate knowledge. And so that's very helpful, as you said, because okay, we got that part. We got the real estate part down, the hard asset part down. Now let's learn the paper part, where you have kind of engineers who are good at, which you find in real estate as well, but good at analyzing, good at spreadsheets, good at due diligence, good at running the numbers, and maybe some more banker types like financial. But that is one thing I love about notes too. No one has it all figured out. There are a lot of different strategies, but usually real estate is definitely a strong. I think my power just went out. You there? It's flickering. So yeah, but real estate definitely helps. Having real estate investing experience certainly helps in becoming a mortgage note investor. But there are a lot of moving parts. And back to your business question real quick. My business just happens to be in note investing. It's almost like they're two separate things. It's like the notes are commodities and I happen to run a business that's focused on mortgage note investing, but you can be a mortgage note investor and not really run a business out of it. I do think starting a business or buying a business and running a business is probably going to be lead to the opportunity for the highest income and profit. I just think an active business, whatever field it's in, is probably going to give you the most opportunity to make the most money, quite honestly. And I agree with you, though. I think what happens is a lot of people end up running a business and then funneling their profits into real estate, which is more of a long-term wealth building play, which I think is a fantastic way to go.
Yeah, I learned that at the local angel investors club. We went because I thought, oh, I'm a accredited investor and there are accredited investors surrounding me and let's go do some deals together. I've got some multifamily apartment buildings here that need some investors. And when I got there, I realized they all have real estate investments coming out of their ears. And they would say things like, that's really how we built our foundation right now. And that's why we're at an angel event, because we're looking to do something that's a little bit more risky, a little bit more high return potential. And real estate's one of those things where, especially commercial real estate, where it's just rinse and repeat, nice and stable. The business plan gets executed over and over again on each property. And I realized that I was barking up the right tree, because when I'm standing in a room of some of the wealthiest people in my area, they're all telling me, beyond real estate, we all have a zillions of those, right? That to get to that point, you really do need to build it off of some sort of platform of investing. But they got money in their business, and most of them are entrepreneurs. And then they invested that money into real estate. And then when the big chunks of cash start coming back in, the way that real estate does that, they'll take that and go invest it in something that's a little bit more of that high potential tech startup type of thing. And I thought, okay, so this is a path that has been done again and again and again. And those are the kind of people that I'm looking for to inspire me, to tell me where I'm going. And so as we were talking before the show, you mentioned that figuring out where you're going from here, because sometimes you can get so head down in the business that setting your
Yeah.
new set of goals, your second, third base, home run goals, can get away from you because you're
Yeah.
so focused on the business. So tell us where you're headed and some of the things that really motivate you to keep doing what you're doing.
I think in the last 12 months, I've really spent a lot of time, the last 24 months, I'll say, a lot of time establishing and systems and things. And we started our two note funds in the last year and a half. We started a loan servicing company 2 years ago. And I had started my note business before all of that, but I'm not looking to start anything new or take on
Mhm.
anything new this year. And what's motivating me is my family, and we've had some challenges with parenting and some health issues in the family and things, and it makes you stop for a second. And as I know you've done yourself, is you realize this is so important. And it's not a matter of, oh, I'm stopping my business or I'm quitting this or anything else, but where I'm headed is focusing on fine tuning our processes and supporting my team as best as possible. Still going to work a good bit myself, but continuing, just I guess focusing on quality versus quantity, and quality
Mhm.
over growth this year. Personally, I'm always trying to grow on a personal development level, but from a business standpoint, we have things rolling, and I just want to make sure we make smart decisions. And I want to create enough mental space for myself to make good decisions from a business and family and leadership standpoint, as opposed to, as you just said, it's very easy to get sucked into doing the day to day. And then all of a sudden it's Friday evening and I don't know what happened. And I haven't, it's very easy for the half the year to be over and you didn't even plan or schedule vacations and things like that. Trying to be a little more focused on that type of thing, health, family, and quality over business growth.
Are you part-timing yourself? You work in
No,
that
I mean,
direction?
I, great question. I do want to go in that direction. One time we took a vacation in Florida, and I would work maybe 3 hours in the morning, and then we'd go to the pool or the beach or whatever, go out to dinner, and it was perfect. It was ideal, and I don't think I'll ever retire. I really don't. That would be. I would like to work a little less. Yes.
Okay. Okay. I've noticed something, and you tell me where you come along in this spectrum. I was listening to an
Hmm.
interview with a high level entrepreneur, and he was saying that he was trying to learn how to invest and he hated investing and he hated learning about it because if he wanted more money, he would just go make more money. And I thought to myself, wait, what? Like that seemed totally foreign to me. I realized at that point that I'm not actually an entrepreneur, even though I have been in this entrepreneurial space for many years, doing
Hmm.
little cottage businesses and my investing business. I'm actually an investor. I want
Mm.
to pile up money
Yeah.
like a Scrooge McDuck kind of money bin where I'm
Yeah.
feeling super secure and swimming around in all of this cash. I don't want to have to go out and hustle and make more. And I realized the mindset between an entrepreneur and an investor, it's two different
Hmm.
profiles. And so where do you fall along that? I'll just go make more money. I don't want to learn how to invest all the way over to the side that I'm ending up on where I'm like, I just want to collect checks in my mailbox.
Yeah, great question. And I think of the cash flow quadrant from Robert Kiyosaki,
Yes.
which actually thought was better than Rich Dad Poor Dad, but that's apparently controversial. But
My kids read the cash flow quadrant. They do not read Rich Dad Poor Dad. They get enough of that from me. I'm like, okay, the quadrant is where you start now. So yes, I agree.
yeah,
I got a lot more out of that book than I did out of Rich Dad Poor Dad.
yeah, they're both good. But I'm trying to do both. I certainly spend a lot more time on the entrepreneur side. I'm trying to move from the kind of self-employed more toward the B quadrant of running a business, which is different than just working for myself. But I've joined a mastermind group that I mentioned to you before we hit record. And that was maybe 6, 7 months ago. It's through the Wealth Without Wall Street guys. It's called the Passive Income Mastermind. It's a small group. And
Ooh, I needed that.
the entire focus is you should absolutely join it. The entire focus is reaching 200% of your expenses through passive income. And there are other ancillary legs to the stool, but they're, for example, just planning for wealth transfer or asset protection or taxes and things like that. It's not all about investments, but for the most part, it's a group of people who come together and look at different investment opportunities, which I know is right up your alley. So I am much more heavily weighted currently toward the small business slash entrepreneur side, but you absolutely need to learn how to put your money to work for itself. And I'm doing both. But I don't, like I said, I just don't want to I don't want to do nothing all day. So,
Yeah.
so I'd rather
Get a
be
few years older,
active.
you might change. I used to
Yeah. I
think the
mean,
same thing, but now I'm like, I'm tired.
you also have a lot of kids and,
That's true. The big family life.
yeah. But I think I'm doing both. To answer your question, I'm doing both. And I do absolutely think, like you said, there's a spectrum. And I think taking the business profits and moving it more toward the investment side of things makes a ton of sense. So that's what I'm doing.
Yeah, that's the long-term planning of the investor, learning how to take the cash that you generate actively and move it into passive income investments. Because with the way that the cash flow quadrant works is you've got this little square, like a Punnett square, and there's no real path moving through it. And so I like to think of it more as a sequence or a spectrum where I have drew a little graphic like this in an ebook that I'm working on, where on one side of the scale you're 100% active income, and that bar graph is eventually going to where you're 100% passive income, and there are half and three-quarters spaces in between those, and everybody's along that spectrum somewhere. If you're an entrepreneur and you just want to keep making money if you need more, I know a lot of salespeople express that a lot. I'll just go sell something, and it's just a foreign concept to me when I hear them say that. When I realize, oh, I'm an investor, I'm a long-term planner, I want my money to work for me, I don't really want to spend the rest of my life in a business. And really the turning point for me for that was when my dad, after he retired, and he did a zillion things. He passed away in 2019. And before that, he had so many hobbies, very handy, very smart math teacher and an English teacher. And he was a physicist, software developer. He was out in the garage and yard work. He built our house. Like, he was an amazing jack of all trades. And I remember I said, what are you doing now that you're retired? A couple of years after he retired, he said, I watch some news and I read the Reader's Digest. And I said, what about music? Are you still composing your music? And he said, no, not really anymore. And I said, what about this or that? Or no, not really anymore. And he finally stopped me. He said, you know all of those things that I said that I wanted to do after I retired? I said, yeah. And he said, I'm too tired to do any of them. And that's the lesson from an 80-year-old man or 75-year-old man right there. And I thought, this is good. This clock is winding down. I would rather wear out than rust out. But at a certain point, you do need to think ahead enough that when you do get too tired to do all the things you want to do, that you have the option to slow down.
Well, that's the word I was going to. Yeah. And so I think that's the word I was going to throw in there was options, because so if you have built up enough wealth and you have enough investment capital working for you, you have options, right? And that's, I don't know. We don't know what our lives are going to look like when we're 80. Why not build up something so that it allows you to have options? And we've put things in place. We do infinite banking as well on the personal side, which is a whole episode to itself.
That's a whole episode.
But that gives us options in certain ways on a smaller scale. So I think investing and learning how to be a good steward of your capital and putting your money to work is only going to give you more options. And one other thing I'll throw in is there is no one set path, and not everyone is the same. And I don't have the same goals as everyone else. And it's very easy to get caught up in what everyone else is doing.
Yes.
I have people ask me I remember one guy that was kind of trying to pick my brain a little bit he was bidding on notes. So he had a whole spreadsheet of notes he was trying to buy, and he wanted me to help him with, what should I pay for these? And the next week he was sending me short-term rental opportunities. Look, you don't know what you want. You haven't figured out yourself. I'm not perfect, but it's like, I can't answer for this guy what he should do if he doesn't even know so you've got to take an assessment of who you are, what your personality is, and also where you are in life and what your goals are. So it depends. Saying that, people don't like that because it doesn't sell, but it depends on your situation, depends on your goals. But I love having options. And so that way same thing with a non-performing note. If we buy it, I don't know how it's going to go exactly, but usually we turn out on the profitable side of things, no matter how it goes.
I agree. And the options, I think, is really what probably carrying both you and my family through this period of transitioning out of a W-2, because I could go teach piano lessons tomorrow, right? I know we are resourceful and we will figure out this kind of stuff. The question is like the highest and best use of our time. We're still really grappling with that question. And the
Mm-hmm.
way that you have basically walked us through the path of where you started thinking, there's got to be something more than this, and gradually moving through those steps. It gives a message of hope to people who are not leap before you look type of people, because I think that they get a lot of the attention and they're out there saying,
Mm-hmm.
oh, in 3 years, I went from being $1 million in debt to a millionaire. And those stories can be inspiring, but at the same time, uninspiring, because the personality type that does that is just not everybody's, it's not a common personality type. And doing the gradual steps like you've done, I think is actually much more relatable to the person, just to the investor listening to your story.
Sure. No, that makes sense. And I think I forget what it's confirmation bias or something else, but the stories you hear of what you just said, of the dramatic turnarounds, which frankly, I have those on my podcast because people love them and they are inspiring. But I'll have to look up the term, but you're only hearing the success stories, right? There are a ton of failures along the way that you're not hearing about. And so I do think if I'd been a single guy, I probably would have played it a lot differently. So I probably played it a little bit more safely because it wasn't just about me. But you've obviously got to do what's best for you and your family and your situation. I don't think everyone should just jump immediately, but there are plenty of people who have, and it's worked out well. Yeah, the gradual path worked well for me, but not everyone has the same job or whatever else. Maybe I'd be doing better if I'd made the leap earlier. I don't know.
No way to know, but you do the best you can. Like you said, it depends. I always ask, it depends on what, but your situation, like your family situation, what are your goals? If you don't even know what your goals are, like write them down, get them onto some sort of a vision board. Like those goals will drive you when things, either shiny object or when things get tough. Jamie, can you follow up with letting people know how to reach out to you after the podcast, and more importantly, why they should reach out to you after the podcast?
Absolutely. So I do have, labradorlending.com is our primary website for my main business. We've got a lot of free resources there. We have information for both passive note investors and more active note investors. And what that typically boils down to is the passive side is the accredited investor who wants to invest in a fund. On the active side, we offer mentorship for people who want to learn note investing or maybe just want to understand it a little bit more to decide, oh, that's not for me. So we offer things for active and passive investors through labradorlending.com. And the other thing I'll throw out there is my podcast, which Emma was I'm very thankful
ball baby on.
Thank you. Graced us with her presence, and that is called From Adversity to Abundance. So I ask your listener to check that out. It's also for entrepreneurs, and so I think it'd be a similar kind of audience profile to your show.
Yeah, thank you. I think that you have done some amazing things over the last several years, your whole career between the athletics and the military, and just thinking differently about things and then taking steps to accomplish that. Even though you didn't rip the Band-Aid off, I don't even want to say even though, that's not even the right word. You didn't rip off a Band-Aid, and you showed that you don't have to, and you probably shouldn't. Like coming through this with a plan and taking it step by step, that's the responsible thing to do. So you were able to still make those incremental steps, and you still arrived where you were going rather than just thinking about it and griping about it. You made an action plan. It's kind of like when people say, oh, I don't want to go back to law school or back to medical school, I'm too old. I'm like, well, you're going to be 8 years older anyway. You might as well be graduated from medical school if that's what you really want. And so the same thing, you took those steps and you iterated on your success to success, and you ended up in a place that is the place that you are wanting to be, and you're continuing to pursue that path. So it's an inspiring story, and you have done some amazing things. So I appreciate you sharing that with me.
Thank you so much. And I do think taking a step is critical. If someone is stuck, take a step, move in one direction. You can still turn 10 degrees and then turn back. You don't have to conquer it all immediately, but I do think taking one small step toward your goal is critical. So thank you so much, Emma. I really appreciate you having me on. This was awesome.
Yeah, thank you. And you didn't cry. Maybe we'll have to do it again and see if we can return the favor. We'll try again.
Follow up.
Thanks so much, Jamie.
Absolutely.
Talk to you
Thank you.
soon. Thank you for joining us on this episode today, and we will catch you all on our next passive income adventure.